What's going on, everybody? It's Stas here. So the stock market had yet again another phenomenal day out there today. S&P 500 up 35 points, up over 1%. The Dow Jones up 83 points, up 0.3%. And the NASDAQ crushed it, up 250 points, up over 2.1%. And in this video, we're going to be talking more about the stock market, breaking down some technicals here, going over the top stocks that I'm actually looking to buy as we're getting deeper here into August and into September of 2020. And I also want to cover some stocks here that, yeah, they could have more potential. There could be more upside from here, but there also could be some volatility ahead. It could be wise to stay away from them momentarily and be very cautious. So I want to go over that group of stocks here in a couple of minutes. And as always, we're going to talk about what I personally did in the markets today. So a lot to talk about. If you guys find value, as always, hit that like button for me. Consider subscribing to the channel. Join our Discord chat. Join our Facebook group. Those are free of charge. Link down below. And you can also get 2 free stocks as well from Webull, valued up to $1,400. Also linked down below. All you have to do is deposit $100 into the account and you get 2 free stocks, and I also get 2 free stocks since it is an affiliate link. So let's get into it here, guys. And it's no secret the bulls are still in charge heavily. NASDAQ all-time high, almost at 12,000 points today. S&P 500 at an all-time high, hitting 3481 here, and it struggled there at the end of the day, but either way, we rallied the entire day, and I'm sure with how the trend's looking like, tomorrow we'll break out of that 3480 resistance. And the Dow Jones, although the Dow is not near all-time highs, I mean, it still went up today. It's getting close to that resistance from yesterday, right around 28,400. And if it's able to break out of that level, guys, this thing could be going up to, let's say, 29,400. That is the next big gap here on the Dow Jones, which could give it upside of around 4.3%. And we'll talk about some Dow stocks here that were swapped in a couple of minutes. Some interesting stuff here going on in the Dow Jones. But going back to the S&P 500, obviously we're at all-time high, so there's no resistances to keep an eye out on, but there are support levels, right? And one could argue that the S&P 500 is in heavy need of a pull down. The RSI here on the 4-hour chart is pretty much off of the page. You know, it's over 70. It's over 80 at this point. It's hovering in the mid-80s, close to around 90, which is ridiculously overbought. So if the S&P pulls down, a couple of levels that I could see it go to, maybe around, let's say, on the low side, 3,400, maybe around that 50 SMA here on the hourly chart, maybe around 3,400. Actually, 3415 maybe to around 3400 on the lower side. That's where I could see it get to on this hourly chart, at least. If it breaks that level, you know, we might be going, let's say, 3350 to 3375. So in general, if it were to pull down 100 points from here, I wouldn't be surprised given how much the S&P has just been on a tear in recent weeks. So at this point, bulls are in charge. We're overbought. I wouldn't force anything on the S&P in terms of, you know, let's say if you're trading ETFs based on the S&P and so forth, options on SPY. You know, I wouldn't force anything at this point. I'd be careful, but then again, you can do whatever you want because this is simply my opinion. You always have to do your own due diligence and your own research. And when it comes down to the Dow, we already talked about those levels, so we'll talk about the NASDAQ really quickly. The NASDAQ, guys, talk about overbought. I mean, geez, the S&P's RSI is falling off the scale, and the NASDAQ is right there with it, right around 88 RSI here on the 4-hour chart. You know, we haven't seen a significant pull down on the NASDAQ since, let's say, the 10th of August. Well, really between the 6th of August to the 11th of August, that's where we saw a pull down from 11,300 to about 10,800. So ever since that $500 pull down or 500 point pull down, we've been on an absolute tear. So we've gained around 1,000 points after that 500-point pull down, and one could argue that, yeah, we're in need of another pull down at this point, whether it's to 11,400, 500. I think that would be healthy overall if we were to see something like that, and from there, maybe we could play TQQQ, which goes up whenever the NASDAQ is going up at a 3x rate. You guys can see today, very good day from the NASDAQ, up around 2%. TQQQ went up 6.4%. Or if you don't like leveraged ETFs, since they are a bit risky, always do your own homework, guys, like I always say. You could trade QQQ, which is not leveraged. It just tracks the NASDAQ, right? So it went up 2%. Pretty much exactly what the NASDAQ went up. So those are some options there, but overall, I am not rushing anything here. I'm taking profits in some of my trades, which we'll get into, and I think cash is a decent idea at this point, and just being patient and waiting for opportunities, I think it's smart. And going back to the Dow Jones here, we had some movement in terms of some Dow Jones stocks. We had ExxonMobil, ticker symbol XOM. It was kicked out of the Dow Jones. Same thing here with Pfizer, ticker symbol PFE, and same thing with Raytheon. 3 stocks were kicked out, 3 companies were kicked out, and Salesforce was added, which we'll get into here in a couple of minutes. Honeywell was added to the Dow Jones, and Amgen was added as well, which I forget the ticker on Amgen. Is it, let's just type it in here on ThinkOrSwim if it pops up. Yeah, AMGN. So these are 3 that were added and the 3 that were kicked out. And ultimately, I think that's an interesting move, right? They're kicking out one of the biggest energy companies out there. They're keeping in Chevron. They're kicking out Exxon. I mean, if I was a shareholder in Exxon, I wouldn't, think this is too great of news. And I've been on the channel before saying I'm not a big energy investor. I don't focus on that sector industry whatsoever. But anyway, I just think that's pretty interesting news that Exxon got kicked out and they're bringing in some more, a cloud company in there with CRM. And there's a lot of other things to keep an eye out for in the current market, especially tomorrow as we're having Jerome Powell speak at 9:10 a.m. here Eastern Standard Time. And this is going to be him discussing the inflation policy, and the Fed is expected to use the annual Jackson Hole Symposium this year to change the way it addresses inflation after it has taken numerous extraordinary measures to fight the impact of the CV on the economy. Treasury yields today, guys, if you were watching this, pretty interesting. They were rising ahead of this Thursday speech, maybe in anticipation of this. Gold was actually rising as well. You guys saw gold took a ridiculous rally. I was going to say hit for a second. It did not take a hit. It saw a big rally. It went from about 1900. Take a look here on this intraday chart, guys. 1900 up to about 1960 today. That was from 8:40 a.m. Eastern Standard up until pretty much now. The futures are still doing great. That's around a 2.5% move in gold. So we're seeing treasuries rise. We're seeing gold rise, silver as well. And that's interesting stuff, right? And Powell's expected to discuss a policy of allowing inflation to range on both sides of a target, letting it rise more than the Fed might normally do to help the economy from being trapped in low growth. So either way, we're going to be watching to see what Jerome Powell is going to be talking about. Is it a lot of the same like he's been talking about here for the past couple of speeches, meetings, whatever you want to call them? Or is he going to be talking about some new stuff? That's going to have the market, maybe not in shambles, but the market's going to be volatile. The market's going to be anticipating this, and the fact that it's 20 minutes before the market open, that's going to make it even more interesting. The market open is going to be even more interesting as whatever he says there could spike the markets up, go down. Watch the VIX. Honestly, guys, the VIX is a volatility index, the fear index. It actually went up 5% today, which is interesting. VIX was up as the markets were up. Ooh, it looks like the markets might be anticipating something tomorrow, guys. So these are some signs. Be careful. And that is what to keep an eye out for. Those are just some points on the markets in general, a quick little market update. Let me know down below in the comments, what are your thoughts as always. I love replying to all you guys in the comment section. Now let's talk about what I did, and I sold a stock too early like I did yesterday, guys. I sold out of Netflix today. Netflix had a ridiculous run, and I've been in Netflix for a couple weeks at this point. I've been in since $496, roughly. That's my cost, $495, $496, and I sold on this strength. And like I did yesterday, if you guys were following me yesterday, I sold out of NEO for roughly a 20% profit pretty early there. In NEO, by the way, guys, geez, it's up to over 20 today. We'll get into that in a couple of minutes. But I sold out of Netflix at $522.07. And it was pretty much a straight line up, guys. I mean, you could have thrown a dart at Netflix today, and you could have made money pretty much from the market open all the way up to 2 hours prior to the market closing. It was ridiculous. So I sold out right around here. I mean, the second it hit 522, that's where I sold out, obviously, because it didn't go back to 522. So I sold out around 11 a.m. Eastern Standard, a little bit before that, and I locked in a pretty good profit there from 496 up to about 520. That is, let's take a look at it here together. That is about 5%. Sure, if I held it, I'd be up around 9%, so I left like 4% on the table, but it's okay, guys. What I've learned in the years of trading and investing in the stock market, you can't grab every single percentage of profit, and if you try, and if you become too greedy, it could work against you. You can end up being in a trade too long. Let's say that the trade turns against you and you end up going in the negative. A lot of things could happen. So I like locking in profits. And another reason why I did this, quite honestly, is because of this Fed meeting tomorrow and this speech tomorrow from Jerome Powell. And I just want to have some cash, right? I've been cash heavy, but I want to just go into more cash here. That's why I sold out of NEO yesterday. I've been locking profits these past couple of days in some positions. I took some profits today, or I sold out completely today in Netflix, right? So I just want to be safe, have that cash ready to go. And I'm also still in Foot Locker. Foot Locker is one here that I got in yesterday at $29.62. Still holding on to those shares despite being down about 1.5% to 2% right now. And for those of you guys that are interested in Foot Locker, I actually filmed a whole video today about Foot Locker, and it'll be coming out tomorrow. So make sure to be in tune with the channel. It's going to be coming out if you want a more in-depth video on Foot Locker. But either way, I think it has potential up to $35 from here, especially if it breaks 30. So I nibbled a little bit under 30. I know it's a bit of a premature entry, but I think, hey, it could go higher. I just want to get my feet wet, and I'm willing to take that risk that, let's say it doesn't break out of 30 and it dumps down to the mid-20s, whatever. I'm willing to take that risk at this point, and I'd just cut losses, right? So that's what I'm in terms of, Foot Locker there. And I'm also still in Upwork. This is one that I want to actually buy more of with this cash now that I have from selling, let's say, Netflix and NEO. I want to buy some more Upwork here, as I think it's just been suppressed for too long. It's been consolidating between 13, actually more like 14 to 15 bucks for the whole month of August. So I think once it takes out 15.75 especially, it's going to have an explosion, a big bullish move there. And I'm in the mid 14, so at that point, if we do see that, that is where I'm going to make a chunk of the money. And I might even consider some call options here on Upwork. And I'm going to be, guys, I was thinking about this earlier. I'm going to be depositing around $1,000, a couple hundred, maybe $1,000 into, Webull here. I'm going to be putting more money into it. And sharing with you guys a couple of the trades that I'm going to be taking. I'm thinking about buying some calls, maybe in Upwork here. I was also thinking about maybe some GLD calls, like I've been telling you guys. And speaking of GLD, I'm still in GLD. I'm in GLD. I'm also in GDX, right, just to have some exposure there to gold. So I might make an update Webull options video, and I'll link a previous Webull options video that I made a couple weeks ago. It's actually been more than a couple weeks at this point. It's been like 2-3 months. Go check that out if you guys do want to see how the platform actually looks there. And actually, they've updated their platform since then, so I definitely have to make a video for you guys there. So be on a lookout for an options video. And yeah, I'm in Upwork, mid-14s, looking to buy some calls. GDX, I'm in at around $42. Very well, did very well today, up 2.5% in anticipation of this Fed meeting. GLD was up about 1.2% today, also in anticipation of this Fed meeting. So might buy some calls there. And pretty much, guys, that's all I'm in right now. I mean, I have a lot of cash, looking to put some more money into options here. You know, throwing another $2,000 into Webull, and we'll see what ends up happening there, guys. And again, I'll show you all in a video what I end up doing. So let me know what you guys did down below in the comment section. I would love to know as always. Now let's talk about what other stocks to keep an eye out on. Maybe some that are a bit overheated, are a bit overbought. Maybe you should stay away from them, but they could still offer potential. It's crazy that they're this overbought. Maybe you should stay away from them, but they can still go even higher. This is the stock market we're living in these days, guys. So the first one is going to be CRM. Again, we talked about this one before. Just got included into the Dow Jones. XOM got kicked out, Pfizer got kicked out, and Raytheon got kicked out. And CRM today ended up going up 26%, guys, 26% on this inclusion. And on top of that, they had Q2 EPS of $1.44, crushing the 67 cents estimated, and revenue came in at $5.15 billion, crushing the $4.9 billion estimated. So double beat on revenue. I believe their guidance was pretty solid as well, and the inclusion in the Dow. This stock is on fire. So am I looking to buy into it now? Probably not. I'm looking to let it cool off. I might stay away from it for a little bit, but I think if it pulls down, if it shows any signs of weakness, we could buy into that weakness, guys, because overall, this could continue going up. It really could. And on this high volume that we're seeing, if some more volume kicks in, we'll just see maybe another pop up. It really could happen here in terms of ticker symbol CRM. So I'm watching Salesforce. XOM, I understand that I told you guys, yeah, I don't like energy stocks too much. I'm not a big fan of them. I don't understand, not that I don't understand energy stocks, right? I understand them, but I don't have my full head around them. I don't have the circle of competence like Warren Buffett talks about to be comfortable investing a lot of money into energy stocks. And quite frankly, I think there's a lot of other stocks that are better that I know more about, more companies that I know about than Exxon, but that's besides the point. And I just think it's still worth watching. I mean, if you're a person that believes in deeper value, investing in deeper value plays, energy could be it for you at this point because energy's been slaughtered. We all know the crisis has caused ships to not go. They need energy, obviously, through oil. It's caused airlines to be screwed, right? They're not flying nearly as much. They need a lot of oil. So it disrupted the whole oil market. These stocks have been crushed. So if you're interested in a deeper value with a high dividend, hey, XOM could be for you. Last time I checked, their dividend's around 7-8%. And yeah, it could be at risk. It could be at risk of getting cut. Half of that dividend, maybe the whole dividend being cut, but it's still worth considering if you are someone of that likes deep value. And one thing here that we could be seeing is a head and shoulder, so be careful, especially if 40 breaks. If it breaks completely, which it seems like it is, we could be heading lower. So be careful with XOM. And another one here that's just crushing it. It could be overbought, but it could go higher, is Facebook, guys. We got news that Facebook here, they're introducing a number of new e-commerce features both within the main Facebook app and on Instagram. Have you guys seen that little shop button on Instagram? And speaking of Instagram, follow me at StasserFest. I do call outs all day. Today we called that Netflix move above 510 on my Instagram. So go follow me there at StasserFest if you guys want live updates. And they're running all these new platforms on Facebook and Instagram, these new e-commerce features, which at the end of the day, it's kind of a way for Facebook. It's crazy to kind of, I don't know if this is a move to compete with Amazon. I guess it kind of is at the end of the day. It could be the beginning of them trying to compete with Amazon if they turn it into some kind of e-commerce, if they try to bring more, obviously, e-commerce features into it. This is going to be interesting because we know Facebook has a massive user base of, 2 to 3, maybe not 3 billion, but 2 billion people, I believe. So this is going to bring a lot of extra money to the business, and investors are acting on it. It's gone from $260 all the way up to $307. It is very overbought, but hey, it could pull down maybe to $290, $300, and we could end up seeing a play off of that pull down. And another stock here is NEO. Like I said, guys, I sold it at $17 yesterday. Let me check my notes from yesterday. I think it was around $17. Yeah, $17.22. Ended up getting in at $14.60, and today it went up another 15%. So although this is very overbought, it's overextended on the RSI. It has not seen a pull down in a couple of days. It can still be going higher, but I'm going to be waiting, staying away until it pulls down. I would love to pick up more NEO in my swing account if it can get to around $16, maybe $17. And if you guys are in FOMO mode right now and you're thinking, oh man, it's never going to pull down, I need to get in right now. Well, take a look at what happened a couple weeks ago. I mean, we went from $7 all the way up to about 16. We saw a parabolic move up to 16, and then it pulled down to about 10. From 16 to 10, guys, that's a correction of almost 40%. That's a massive pull down. So from where we are now, $21, don't be surprised if we do see a 30% correction back down to 15, 16. I mean, that's the type of stock NEO is at the end of the day. Am I saying it's going to happen? No, I'm not saying it's going to happen, but it definitely could happen. And if it did happen, I'm going to be ready, and I wouldn't be surprised if it did happen, right? So watch out for NEO. It could pull down, and in the meantime, I'm kind of just waiting for that with NEO here. And the other ones that I want to go over, very similar, right? Tesla and Apple, we all know these are very hot right now. Tesla up 6.4%, hit an all-time high today at $2,173, up $130 on the share. So people are continuing to buy into Tesla heading into the split here. And it's like a toss of the coin at this point. Are we going to sell off after the split? Are we going to continue going up after the split? I get this question every day, and the truth is, I have no idea, which is why I'm staying away from Tesla at this point. I know it's crazy, but I'm looking at this. I'm looking through all of the mania, and I'm trying to think straight. And I'm like, okay, I already own Tesla, the stock, so I don't really need to buy at these levels. And I think it's safer for me to wait after the split, see what it does, if the sentiment cools off a bit around the stock, and then maybe I'll get in, right? It obviously depends on what your situation is. It depends on your situation, but for me, I'm already in the stock. There's no need to rush it, and I'm just going to wait until after the split, guys. So that's just honestly what I'm doing. Maybe I'll play some options. We'll see what ends up happening there, but yeah, those are some thoughts. And kind of the same thing goes with Apple, right? Exactly what I just said with Tesla goes for Apple as well. I have a position indirectly here in Apple. I actually sold my Apple stake itself. I forget how long ago, but I made some good money on Apple. I sold out, and ever since then, I've just been indirectly invested in it through different ETFs. And obviously, I don't have to worry about those positions being split. I mean, obviously, the ETF deals with that. I don't really have to focus on that. But when I'm looking at my trading account, right, for a potential short-term play. I'm looking for Apple anywhere, let's say 480, 490, but then again, I'm going to wait until after the split. So if it's trading at about 150, 125, 175, we'll see wherever it's at. We could end up making a move there and kind of seeing if it dies off after the split, if it brings more investors in, like a lot of people think it's going to. And other than those, I'm looking at HD, Home Depot. It's looking like it's getting pretty close to 298. Yeah, it's a bit overheated as well, but with the stellar earnings they just reported, I mean, this stock, I believe, could continue to go higher. But again, do your own due diligence, your own research. Don't get into this because I might get into it. I just think it has potential to break out of $300. And another one that's reporting earnings tomorrow is Ulta, ticker symbol ULTA, at 220 right now. Excuse me, guys. This is a big resistance stemming back from the middle of April. We only broke it a couple of times since then, so I'm thinking if it's able to break 220, 230 is where we're headed, and above there from 230 maybe up to 250 is where Ulta could end up getting based on these charts. And DKNG, DraftKings, is another one that I like. It pulled down a bit today, down 0.5%, but anywhere above $39, $40, I think this could be a breakout play up to the mid 40s, maybe even above 45, which is the resistance from back in the beginning of June. So overall, guys, those are the main stocks that I'm watching at this point. It's a lot of the same. I'm being careful heading into tomorrow. In terms of this Fed meeting, it could cause a lot of volatility, maybe adding some gold options, call options to kind of hedge against that. Oh my God, I'm choking, guys. Oh, geez. Maybe adding some gold options to hedge against that. And yeah, that's kind of where my head is at. And those other stocks we just mentioned, some of them, again, they're a bit overheated, but don't sleep on them going higher. They could definitely go higher. That's the truth of it. And we just have to be careful at the end of the day. So let me know down below in the comments, guys. What are your thoughts? Let me know. And if you guys enjoyed the video, hit that like button and also subscribe to the channel. And don't forget to claim your 2 free stocks from Webull. Those are valued up to $1,400. Link down below in the description box. All you have to do is deposit $100 into the account, and that is when you get your 2 free stocks. So I'll catch you all in the next video. Thanks for watching. As always, peace out.